My name is Charles Brown III, aka CB3. I'm a portfolio manager and financial educator, and I've been an investor for more than 30 years. As a portfolio manager, it's my job to keep our clients calm during difficult market periods. I did it in the crash of 2008. I did it in 2009 and 10 as a commentator for Fox News. And I did it in 2018 during the trade war scare. But 2020 was different. The pandemic brought a new intensity of uncertainty to all of us. When I began researching this week's show, I asked, how can I encourage them financially this week? How can I help them make their week more successful? That's why CB3 Live exists. We've been on 2 platforms in 2 cities with the goal of providing financial truth and a sense of calm about what's happening right now. Every week, I look forward to providing financial peace of mind to my clients and listeners. It's for this reason that it's a privilege every single time I start a broadcast by saying, from COVID, U.S. policy, and world economics to clarity. This is CB3 Live. Good evening, everyone. Live from Nashville. It is Thursday, April 22nd. I'm Charles Brown, Portfolio Manager with CB3 Financial. We're so glad you're with us tonight. From COVID to U.S. politics to the world economy. This is CB3 Live. So you heard it on the video and now you've heard it here too. So I am going to start tonight with some letters, and there are 3 tonight. One I'm going to handle in the first segment, one I'm going to handle in a couple places, and the other question is so good that I'm going to literally handle it throughout the program because I needed to answer it for myself. The first one is the George Floyd trial. Charles, you discuss all kinds of economic things. Why are you not mentioning that? Well, I will tonight because I think it has financial relevance. Remember, this is a financial program. Second question is, why did my portfolio underperform these last 2 to 3 weeks when the market was doing pretty well? That's a fair question, which I will handle. And the third question, Charles, I enjoy watching your program. I've been watching for pretty much the whole year you've been on. And I'm wondering why you keep doing these with COVID mostly now on the way out. And that's a question that I needed to answer for myself. And it's so important that I'm hoping you'll stay all the way to the end because I've actually answered this in several places. And I think it's important that you need to know that. So tonight, exceedingly earnings. That's my way, sort of funny way of saying the earnings are just knocking it out of the ballpark, guys. We're really excited about that. The Enigma variations, with all due respect to Sir Edward Elgar, who wrote the symphonic piece called Enigma Variations. The enigma that I talked about last week was all the things that are happening on the political front that don't seem to make any sense to us as investors. This is a financial program. So if I see administrations at the federal, state, or even local level, I'm going to call them out, especially federal and state, because we need to look out for our investing family. That's what we do here at CB3 Live. So for those of you that are new to the program, we'd ask that you would subscribe to us on YouTube, click the little bell so you get updates on a regular basis whenever I go live. That's usually Thursdays and sometimes Mondays, but you'll also get a notice when I upload a video on Monday. Also follow me on Twitter. I tweet every single day, sometimes twice a day. Follow me also on Facebook and LinkedIn. Our LinkedIn audience is pretty good. So we have a new segment tonight. Now this is something that it's kind of an answer to that first or third question, I should say. So why are we doing this program? I really needed to ask myself that because we started doing this March 12th of last year to give you guys peace of mind. And in fact, it says in my opening video, what's my goal? My goal is to provide financial peace of mind and clarity. Now, one of our longest term listeners said to me in a chat, he said, you know, you bring clarity to me and I don't really even know that much about investing. And I like that clarity, and it's rare because it seems like when I listen to other financial media to try to understand things, it's hyped, and it is true that it's hyped. And that's one of the reasons why I continue to do the program. So I ask myself, how can I help you guys become more financially successful? And that's why I put together the program each week. So my ace graphic artist, Heidi Steiner, came up with this idea. So we've got investing clarity, but investing in you. And that's really what I want to do with this show. And I'm kicking off this segment, which I'll start to open with every time, with this rarity of clarity seen. And again, it's not because I have, just a wealth of knowledge or a secret compartment where I can pull out all this clarity that no other media outlet can or financial source can, but they have an agenda. Okay, my agenda is to manage portfolios for some of you and to educate some of you. If you're on this program, you're either a client and you're watching to see how your programs are doing, your investment programs, or you're someone that wants to be educated from someone that's been doing this 30 plus years. So one of those two people, and I really want to bring you clarity. And according to my longtime viewer, he finds it rare. So I'm glad that's the case. So let's come back and let's talk about what we've got going right now. This is a stop the press item. Now, I called out Donald Trump in June of last year when he made a boneheaded comment about clamping down on the healthcare industry, and it tanked the market near the close of one day, like 300 and some points, because obviously we were just coming out of a recession at that time. The market low was March 23rd. This was just a couple months later in June, 3 months later. And it really was a dumb thing to say while the market was open. And President Joe Biden did the very same thing today. So just as the market is getting momentum, getting back on track this week, President Biden drops this nuke on the market. And what's he saying? He's saying, basically, I'm considering raising capital gains as much as 43%. 43% on those making $400,000 or more. Now, I know you might be saying, if you're on this call, I'm not making that much. But I assure you that if he's going to raise it that much on those making $400,000 plus, it's going to trickle down to practically everyone. All right? That's almost double the current rate. I hope it's only a trial balloon. I hope he's just throwing that up to see what happens, okay? Because it is not good for the markets. Regarding George Floyd and that whole trial, and there are more of them. Obviously, the other three officers are going to be on trial now. This is a financial program. I have opinions on social commentary, but here's my issue and how it affects you guys as investors. We now have fresh calls because of this, quote, victory in this court decision to defund police all over the country. Okay, local and state officials basically debating whether they should shift part of the police budget to social services. I don't know about you, but if somebody's breaking into my house, I don't want a social service worker coming out to see if they can talk through and reason with this thief. I just don't think that's going to work, okay? Others in primarily blue cities and states are calling for the abolition of contemporary, that means current, police departments. This will lead to violence and crime, folks, and it does not help an investing environment. It's just that simple, and I've stood by or sat by long enough without having this comment to you folks, all right? As your portfolio manager or as your financial educator, it is in your best interest for me to be able to tell you that we have a safe and consistent and steady investing environment, socioeconomic environment in America, so that what really drives the market, and that is earnings, okay, and even interest rates, but certainly earnings, that those are allowed to play out with all this sideshow not occurring. That sideshow is when we have social unrest and instability. And this current administration is increasing that, and it concerns me. It greatly concerns me. The second letter that I got tonight, why is my portfolio underperforming these last 2 to 3 weeks? That's a fair question, and I want to give you an example here. Let's look at the screen. So here are a series of numbers. Now, if you know what FG means at the top, you're pretty good there. But if you were looking for performance from a portfolio manager, and let's just say that these numbers on the screen, you can see they're all right around high 40s, mid 50s. If I were to tell you this was a portfolio manager's success rate in choosing winning trades, how would you feel about that? It doesn't seem very impressive, does it? Okay, well then let's look at it in a little bit bigger context. Let's look at it here where you can see FG stands for field goals. That's the percentage that this particular individual had of completed field goals. Now, I don't know if you know who this is yet, But the reality is that's out of 82 games in most seasons. That's a full season. Just a little over 50%, okay? And yet, you would think, well, maybe that's not terribly successful until you see who it is. This is Michael Jordan's actual record. And he was able to turn this into postseason games with 45 plus points. So my point here is that it doesn't take a series of 76 to 80% winners to be a successful portfolio manager. I wish that I had those numbers. I guarantee you Michael Jordan and Kobe Bryant, who was also listed on that previous screen, would love to have had numbers like that. What it takes is consistent, week after week, year after year, analysis of what's in your best interest as far as risk-adjusted returns in the stock market. What it takes for a basketball player, what it takes for a baseball player to hit. A 350 baseball player or 333, 1 out of 3 at bats is hugely successful. Believe me, those batters want to hit 850. I mean, they want to hit 1,000, but nobody bats 1,000. So there are simply times when we're going to underperform the market, even if the market's going up. Now, if I invested exactly like the market, then we would go up with the market and down with the market. Today, for instance, we were doing just great. We were beating the market, even with the market down. And then, of course, President Biden dropped that bombshell, which was the boneheaded move of the day. I've already said that. I've also clarified that I call out President Trump when he did these things as well. So let me give you another example here. Okay, this day in history. I've never had a this day in history segment, but I thought this was pretty interesting. So this day in history in 1980, so we're talking 40 years, 41 years ago, Joe Granville, who was a stock wizard at the time, signaled to his 1,500 subscribers. And these are people who were paying to listen to him. Of course, back then you just mailed things. There's no email or anything. Buy stocks, buy stocks. Well, the next day the Dow surged 4%. He then went on TV and said, I think this call was so accurate, I'll never make another mistake, another serious mistake, quoting him accurately, for the rest of my life. He freely admitted during that interview that he didn't even invest in his own stock recommendations. Over the next 10 years, Mark Holbert, who is another advisor and another analysis firm, calculated that had Mr. Granville's followers made every single trade he recommended, they would have lost 98% of his money, of their money. And he probably would have too if he'd actually invested in his stocks. This is one difference. I am invested, and I've told you guys this before, but from time to time we have new listeners on. I invest in exactly the same programs that my clients invest in. I trade the same accounts. I may have a different weighting. Maybe my aggressive programs I'm more invested in, and some of my clients are in more conservative programs, and the mix can change over time. You know, people have a life situation where they need to get more aggressive or more conservative, but nonetheless, the actual program holdings are the same. All right, so that answers that question. I'm going to actually come back to that in the next segment. So let's look at this news item. Okay, so from time to time, I get asked, and this is Kroger closing 2 stores. Why did Kroger close 2 stores? Well, because they were ordered by the Long Beach City Council to institute hero pay. Okay, by increasing wages by $4 an hour. Doesn't sound like a lot, but if you're in a very slim margin business like groceries, it's a lot. So they made the determination, those wise people at, sorry for the sarcasm tonight, but it's just appropriate, okay, to mandate that Kroger do this. This is what happens when government gets in the way of business. Now, this is at a local level. You could argue it's at a state level because there were several stores throughout the state being shut down. And that's the theme of where I'm going here with government interference in free enterprise. So they made the decision, and within a few weeks, Kroger basically came on and said, well, we're going to have to close these stores. We can't afford to keep them open. So instead of making $4 more per hour, all those people were out of a job, and they're on the unemployment rolls for the Long Beach unemployment system. Now, this is what happens when well-paid lawyers come in and decide to make a brilliant deduction like that. I hope that they learned their lesson. Those of you that have been watching know that I cover COVID, U.S. policy, and the world economy. Those are our regular segments. These will now follow, just like I did tonight, the opening segment where I will leave my my opinions there. So, all right, what do we have going on? Well, in COVID, we actually have the Bank of Canada making a brilliant statement here, and I shouldn't be sarcastic. It's actually decent of them to say this. There are brighter days ahead. We think we're going to get back to a complete recovery sooner than we thought. Well, I'm glad that you feel that. I've felt that actually since well after the mid-peak in January, all right? And there are others around the country that are feeling that too. Canada doesn't have the advantage, of course, of having so many vaccines. We'll get to these stats in just a minute. But at least the governor of the bank there is realizing that, yeah, things are turning a corner. That's good to see. There are almost 130 million. Last week, I think it was 118 or so. 18 and older, that's more than 50% of the U.S. adult population that have been at least vaccinated with one vaccine. And because of that, the CDC has released or relaxed, I should say, their fully vaccinated people requirements. So you can go out, you can go in small groups, you can have it without a mask as long as you have physical distancing when it's more than 20 people. So that's positive. What I want to know is why I'm still seeing blue states getting on the phone to their local municipalities, the governor's offices are, and saying, no, we're going to shut this down. No, we're going to shut this down. Folks, it's literally a separate culture from the state that I left, Illinois, and the state of Tennessee, which is open for business everywhere. And it's not just Tennessee, it's other red states that want to see us pull out of this pandemic. This has been a terrible pandemic. It's cost hundreds of thousands of lives, hundreds and hundreds of thousands of jobs, and the sooner we get out of this, the better. The last few weeks I've been telling you that Johnson & Johnson has the third vaccine of the three. So we have Pfizer and then Moderna and then Johnson, which is a one application vaccine. But they had to put it on hold last week because there were 6 cases of blood clotting. So now let me read this from the Defender. This is just 5 days ago. They're reporting that, if you really collect all the data, according to the Defender, 795 reports of blood clotting disorders, 400 attributed to Pfizer, 337 to Moderna, and now 56 to Johnson & Johnson, dating all the way back to December 2020. My question is, why did we pull Johnson and not Pfizer and Moderna? And I am not suggesting we pull Pfizer and Moderna. Back to the purpose of this program. If you want to see your investments grow, if you want to have a solid, viable investing environment in this country, you need to let business run itself. Understand that there are risks. If I want to get in my car after this show and drive over to Nolensville and get a pizza, there's about a 99.9998, sorry, I had to do that math from a calculator today, that I'm going to make it home and back safely. But it's not 100%. I will never get in my car where there's a 100% possibility of me getting there. But even the number I just gave you is a riskier number than you, if you choose to be vaccinated. This is a different issue if you don't choose to be vaccinated. But if you choose to be vaccinated, the chances of you having a blood clot are smaller than having an accident in a car. Now, I'm not going to try to do the analysis if you're driving from Tennessee to Seattle. That's a different set of risk, I'm sure. All right, also in COVID, 1% of the population in Japan has gotten a dose. Why do you think they're having so many problems in Asia? Why has only 1% gotten vaccinated? Why? It started over there in Asia. Obviously, it started in China, not Japan. It's because they don't have the vaccines. Why don't they have the vaccines? Because they didn't incentivize their companies. Why do we incentivize our companies? Because we're a capitalist society, and the previous administration said, we need all of you guys working on vaccines. If you remember 2 weeks ago, I said, there are 41 companies now working on vaccines, some of them from a pill, some of them from a shot. There are various variations, some of them rolling it into an annual flu shot. There's all kinds of things that are going to come out over the next months and weeks about this. But these are, for the most part, taking AstraZeneca out of the combination, these are American innovations, okay? 50.4% of U.S. adults have received at least one shot. No other country in the world can make that claim. So as I wrap up the COVID section, what's the PI? Those of you that have been watching for the last month know that my favorite acronym now is PI. That means Portfolio Impact. because it's not going to be on the show unless it has some impact. Here's the impact. America is surging, and it's exceeding other nations by vaccinating our people because we have the vaccine, because we incentivized our companies, and that's what they were able to do. And that is why I want to see this continue. Rather than government getting in the way, government incentivized, as in paid them to develop these vaccines. And are we better because of that? You bet we are. And that's what we want. That's what I want for those that watch. So going back here, why do I keep doing this, even with COVID on the way out? Because there is an aftermath to this COVID pandemic. And I want to make sure that people that are watching this program understand that there are repercussions from the way government is now stepping in to interfere with our free economy, and it affects my ability and all portfolio managers' ability to manage money. And your money is what's at stake and what's in line here. Okay? All right. So, politics leads to policy, which leads to portfolio impact. There's just no way around this. There's just no way around this at all. All right? Politics leads to policy, leads to portfolio impact, and that's why I have to mention it. We saw this last week. This has actually been updated. Joe Biden wants to have this massive, massive infrastructure program. Okay? This is a quote from one of the Democrats who actually lives in the state of Delaware, just like the president did. You know, this is a quote. "We believe in what FDR," that's Franklin Delano Roosevelt, was doing. You have to seize the moment when government can step in and make effectual change in the U.S. It's a moment of crisis and a moment of great opportunity to lift the country together. Okay, what that really means is it's giving us an opportunity where we can exert, we, the government, more financial control over you and me, the people. And that is not in our best interest. What needs to happen in this list right here is that we need to take everything off of here. Certainly capital gains, raise the corporate tax, 15% corporate tax. Folks, I'll challenge you right now, because I have folks on the left and the right that watch this program. If I have missed something other than this infrastructure program at about a $700, $800 billion price tag, I think that's a good idea. And if the Republicans are able to convince the Democrats to just enact that and not this gazillion, $3.4 trillion package with all the pork in there, if you can think of anything else that this administration has done to make our lives better as investors, send it to me. Send me an email, just like these people have here. Okay? And I'll read it on the show. I'll even quote you if you want me to. I'm trying to give anybody that's in government an opportunity to have a fair shake to make us more whole as investors. And I'm just not seeing it. And I'm calling it out. All right. So a senior Republican senator, I mentioned that, thinks it can be about $800 billion. I'm going to be watching this all the time, of course, because I do not want to see even a $1 trillion infrastructure plan. A lot of good can be done for an $800 to $900 billion infrastructure plan. So here's the next one. And I mentioned her last week, Janet Yellen, former chairman of the Federal Reserve, now the Treasury Secretary, who has decided that she really wants to be the SEC. So she wants to be Treasury Secretary and also head the Securities and Exchange Commission. Why? Because she wants to set policy for the Securities and Exchange Commission. What she really wants to do is determine how, we're basically reporting company profits. This is a quote here. This is a quote on what she said at a meeting this week, a symposium. Quote, "We recognize the financial sector has an opportunity to play an important role in financing and leading the transition of the global community, the global economy, to a net zero economy. A key challenge, though, as you know, is that the current financial reporting system," now that's the quarterly earnings cycle that you guys know about when I'm reporting earnings, exactly what we're doing tonight, okay, in the next section. "The current financial reporting system is not providing the reliable, consistent, and comparable disclosures needed for investors to accurately compare climate-related investment risks and opportunities across companies in which to invest." What a bunch of gobbledygook. So now the Treasury, not the SEC, the Treasury wants to step in and change the structure of how U.S. corporations weigh their balance sheets, report to the public. Folks, that is a colossal train wreck waiting to happen. How do I value a company if I know that the government has its hands on there and is weighing whether they are socially sensitive or environmentally sensitive? And maybe that's a ding on their, it's basically a liability accruing on their balance sheet. Some of this is maybe something you don't want to hear about as far as accounting. But when a government can come in and do that and mess with the reporting system that we've had now for 100 plus years, that is a serious situation, and I'm calling it out. That's not something that helps us as investors. So here's the next interesting thing. I said this was coming up last week, and here we are. The U.S. map is getting redrawn, okay? So the states that are losing seats, what a shock. California, Minnesota, Illinois, Michigan, Ohio, Pennsylvania. All right, probably New York. They're in stripes. It's up between New York and Alabama. But basically, this once-in-a-decade fight is taking place, and it's going to make a decision for how the next year's elections play out. So why is this so important? Well, the mapping of the U.S. is actually done by the state legislators, okay? So when you're either appointed or removed from having, an office, you either have to have an additional person run for office. If you're in Texas, you're going to have 3 new seats. If you're in Pennsylvania, you're going to have 1 less seat. So even if the person wants to run for re-election, they're not going to be able to because their district doesn't exist anymore. You may not have known that that's how this is done, but the same redistricting actually happens at the state legislative level. Okay, and right now, Republicans are in control in more states than Democrats are. So let's look at this map again. This could absolutely positively affect the 2022 election. And of course, the Republicans are counting on this happening to reclaim control of the House. I will be following this. They will basically make an announcement, they meaning the Census Bureau, when all the data is here. Last one, sorry guys to be confrontational and whatever you want to call it here. It's just there's no other way to say it. I have done analysis of the first 100 days of Joe Biden, and I have pretty much concluded that he is the most far left president in this country's history. I did not see this coming. I did not see this coming, folks, but let's look at the reasons why and why it matters to us. So the Green New Deal, okay, so that's coming back. The Paris Accord that President Trump got us out of, Biden's rejoining, packing the Supreme Court. How in the world does it help to go from 9 justices to 13 when everyone on the planet knows it's going to be 4 liberal judges and it's going to be a position basically where it'll be one-party government. One-party government leads to communism. The Republicans don't want one-party government. The Democrats do. I think they always have, but it's never been more so since Joe Biden took office. Massive spending, statehood for Washington, D.C. Why do we need Washington to become a state? There's 700,000 residents there. What is that going to do? Again, this is an investment program. How is this going to help my investors? How is it going to help my portfolio choices? What's in it for us as investors? Nothing. Massive spending, big taxation, already talked about that. Legalizing marijuana, I'm not for that. I know some people are, but I can tell you that many law enforcement agencies in this country says it has caused significant issues in Oregon and Colorado, and I just don't think it's a plus. I don't think it's a plus. I don't think it helps us as investors. So lastly, condemning the Georgia voting law. Okay, why did he jump in on that? Georgia made their decision on that. This was done by a governor who basically put his thumb in Trump's face when Trump asked to gain additional votes in the Georgia Senate runoff. And now that I've angered those of you on the left, I'm going to anger those of you on the right. You want to know why the Republicans lost the Senate? They lost the Senate because Donald Trump did not go down there and effectively campaign. He basically just let it play out. And L. Lynn Liddy, or whatever his name is, the attorney, basically didn't participate either. He said, just stay home. So there's a whole lot of blame here for those conservatives that are basically seeing we have a 50-50 Senate that's split with, the vice president breaking ties. Okay, I really didn't mean to anger all of you, but that's the reality here. This is what's at stake. We have an unstable situation right now that is not pro-investor. It is not a ripe environment for companies to be able to go out, make more widgets, and produce profits. Are they still doing it? Yes. But why did the market tank today? Just why I said, because once these rumors start getting out there, it's going to make it tougher and tougher. I'm not backing away from being a bull, and I'm going to show you this in the next segment, but that's where we are with this. All right? So,
today's political...
Sorry about that. Hit the button a little bit early. I want to come back before I start the video and just say this. In the thumbnail, I said the enigma variations. Last week, I said it was an enigma. That's a quandary. That's something you just can't understand. And that's why at the federal level, we are making decisions that are bad for investors. I think it's bad for America in general, but certainly not good for investors. And that's what I'm here to do. Back to my listener's question. Why do you keep doing these? Because I don't know who's going to do it without an agenda. Frankly, it seems to be kind of rare to be able to speak this clearly and say what's going on. It doesn't take a whole lot of genius. It's just looking at what's going on and telling you, the folks, I want the best for you as my clients and as my people that are coming on to get educated. Do you think it's kind of odd that neither political party is a very good friend with corporate America right now? Does it look like as big a mess to you as it does to me? That's what I wondered, and I tried to do a little research, and I think I've got the answer for you. I really do.
Today's political world has become kind of a lonely place for the business community. Corporate leaders have some big problems with both political parties these days, and increasingly it looks as if the business community doesn't have a natural home in either political party in today's political alignment. Let's look first at some of the problems the business community has with the Democratic Party. By and large, business leaders were happy last year when Joe Biden won the Democratic presidential nomination rather than the more liberal Senators Bernie Sanders or Elizabeth Warren. And the business community is actually quite happy right now that the new Biden administration has proposed a big plan to improve the nation's infrastructure, something corporate America has thought was needed for a long time. But business leaders are unhappy because they think the administration has thrown too many extraneous items into that infrastructure package, driving up its cost. And they're particularly unhappy that the administration has chosen to pay for the entire package through increases in corporate taxes. Business leaders have long favored more targeted taxes, such as an increase in the federal gas tax, to pay for infrastructure improvements. At the same time, business leaders are unhappy with some of the early Biden administration regulatory and executive decisions, particularly that early decision to cancel the Keystone XL pipeline, which was to bring oil down into the United States from Canada. If you want some flavor of the way the business community looks at these decisions, look at the U.S. Chamber of Commerce. It has called the plan to pay for infrastructure improvements dangerously misguided and said the Keystone XL pipeline decision was politically motivated. At the same time, though, business leaders also have some problems with today's Republican Party. Many of them were opposed to some elements of President Trump's plans for trade and immigration policies, and they objected out loud to the president's attempt to turn around the results of the 2020 presidential election. In fact, some business leaders said that as a result of that attempt by Donald Trump to change the outcome of the 2020 presidential election, they would stop giving money, at least temporarily, to Republican candidates and the Republican Party. Now some big businesses, Coca-Cola and Delta Airlines, for example, have spoken out against Republican plans to tighten up voting procedures, particularly against a new law to change voting practices in Georgia. As a result of those business moves, there's been a kind of an unusual war of words breaking out between the business community and Mitch McConnell, the top Senate Republican. He has essentially called on businesses to stick to corporate matters and stop interfering in political and social debates. Senator McConnell later backed off of those words a bit. Still, the tension over this bout of business community activism is still there. There's a backdrop for all of this. The Republican Party has become more populist and therefore less friendly toward big business, big technology, and big finance. And meanwhile, the Democratic Party has moved to the left as its progressive wing has become more powerful. Bottom line, it's not clear there's a comfortable landing spot for the business community in either party these days.
So if you're feeling a little disenfranchised, you could say that corporate America is as well. Although I think corporate America, frankly, mostly sides with the left, and I would argue even the far left. And that's what AT&T and Disney and others are bringing to politics right now. And it just makes for a very complicated situation. I want to go to the chat box here. So Tom Zeniger, good for you that you got Michael Jordan. I saw that you typed it in before I actually said it. So A+ for you. K, politicians are incapable of common sense. If I believe that, I guess I would be very despondent, and I don't want to be despondent. But I do think that they put power and money for their own good ahead of the people that they represent. I definitely would agree with you on that. I agree, Alice. FDR, Franklin Delano Roosevelt, was the only president to serve at least a portion of 4 terms, 3 and change, so to speak. Basically, he had to do what he did because we had great unemployment at the time. We're not in that situation right now. We don't need government interference in what we're doing. We've got great stats. If you don't believe me, just stay on for the next 5 to 6 minutes and you'll see them. All right, so Kay asks, why does D.C. not be incorporated into Maryland's landmass? It could, except that the Constitution provides for a separate area where the capital will reside that keeps it away from state politics. Imagine if you had the capital in a given state, it would taint everything to do with that state. So the District of Columbia has representation, but it's not a state. All right, so there's your answer on that. Guys, keep asking questions. I will stop from time to time and get there and reply whenever I can. That's the purpose of the show. We want you to feel like at any time you can ask questions and I'll get to them, I promise. So the world economy is the third section. We cover that in basically 6 subsections. I don't always do each of these every week, and I won't this week either, but this week we're going to hit the highlights of them. So the weekly market review, and this is a really good sign here. You guys that have been following the program, take a look at these numbers. The Russell up 10.8, Dow 10.5, S&P 10.1, NASDAQ trailing. But why am I excited about this? Because I have been saying since the beginning of the year when the Russell actually the end of December, when the Russell took out in front of the other indices, and basically our SG program started outperforming our CG, that the various asset classes were all lagging the Russell. But to be successful in continuing a secular bull market, we want to see all the asset classes doing well. Look at Gander at this again. 10.8, 10.5, 10.1. Guys, that's a dead heat. Now, the only asset class is the NASDAQ. And the NASDAQ, as you know from last year, was by and away, far away, the best performing asset class. Okay, best performing exchange. And I think that it will come back strong, and you're going to see maybe even a photo finish. A photo finish is a great answer because it means what? It means there is significant, wide-ranging participation. All right, and that's what we want to see as investors. And we want to see it in a way we can invest. All right, so I put this on here because one of our viewers said, and this isn't a question that I actually commented because this is some time ago. He said, I just don't feel like the market's, it's just not behaving right now. And I was like, okay, I get that. Do you want to make trading decisions based on that? And they said yes. And I said, let's really make sure. You sure you want to do that? And they said, no, I guess not. What do you feel? It's like, I don't feel, I think. I feel when I watch a movie or when I'm holding my wife in my arms. All right. But when it comes to investing, I don't feel. I just don't. It took me 30 years to get to this position. All right. So feelings are not facts. The great philosopher and pastor, Dr. Erwin Lutzer, said in a recent message that I listened to, feelings are not facts. Now, I'm going to be off camera for a little bit here because I want to go through this. You guys have seen this before, but I've highlighted it. It's updated to the very latest day. This is a chart of the S&P 500, and I want you to see there have been 2 major tops in 100 years. So the chart starts in 1925. Okay, we're going to call it 96 years. All right. Look at the secular bear market. That's a secular bear market in red. That's the Great Depression. And then we go straight from 1951 all the way to 68, annual return of 11.2%. Okay, and then that's a major top. So how long did that take? That took a long time to hit that major top, guys. A long, long time. And then the secular bull market stays in place for quite some time. All right. So let's look at that. Actually, let me move forward on this. All right. Sorry, guys. Okay. Now, we stay in that secular bear market for quite some time until 81. And then from 80, 81 roughly, till 2000, that's 20 years we have, and there's even a market crash in there, okay? But the annualized return of 15.4%, that is significant. 15.4% is an unbelievably great return and exceeds the roughly annual return over 100 years of about 9%. We've had some years like that. Last year was that, for those of you that were investors with us, our growth programs were up 62 and 63.5%. Now we broke out, look at the little blue arrow, the last one there, we broke out of the last secular bear market on April 13th, which you can't see there, but just trust me, okay? April 13th, 2013. So what does that mean? Well, if you look at the previous breakouts, we're going to be in this secular bull market, as I've been saying, for probably another 8 to 14, 15 years. I know that seems incredible. Will there be downturns? Yes. Again, look at what happened in 1987. I know exactly where I was. Those of you who've been watching this program in the past, I've said I know exactly where I was when I came into my home that night and saw Tom Brokaw say the market crashed today and all is going to be lost. Well, it's just not true. Now it's a blip on the market. It's a blip on the chart, I should say, okay? Also, what does this mean for us? What this means is that we remain in this secular bull market. What's some other data that I use? I apologize for all the marks on this screen, guys, but here's what I want to show you. Look at it carefully. The industrials, the S&P 500, the third column's the NASDAQ, the fourth column's the mid caps, the fifth column's the small cap. Notice in yellow, none of them is at a lifetime high. None of them. Excuse me. Now look at the green in the bottom. That's the momentum. So those of you that know, have been with me a long time, know that I'm a relative strength trader. I don't really trade on fundamentals, which I refer to as funny mentals. I look at the technicals on a chart, and that's how I make my trading decisions for my and your accounts. And what I see on this chart, and we're going to get this sooner or later, guys. All right, there we go. What I see on this chart is that the momentum continues to be strong all across the asset classes, even when they're not trading at highs. All right, this is a really important distinction for you to understand because you need to know when we are falling out of a secular bull market. It's a big deal. This is one of the many charts that I use to determine this. 53% of all trading days are higher, 60% of all calendar months are higher, and 75% of all calendar years end higher. I can't give you any more important statistic than that to realize. I'm going to read it again. 54% of all trading days end higher over the last 100 years. 60% of all trading months end higher, and 74.6, we'll call it 75, of all calendar years end higher. We'll go up and down through super cycles, but the reality is we are in a secular bull market, and you just need to trust and believe me on that. The data is here, okay? All right, here's another technical indicator I use, XLY versus XLP. So discretionary items are items that you buy that you want. Staples are items that you buy because you need. If you're feeling flush and you're making a bunch of money and you've gotten a check from the government or you've gotten a raise, you're going to go out and get a new house or a new car or something that you don't really need but you want. I don't know anybody that if the market is doing really, really well and they're feeling flush, that instead of ordering a roll of, a package of 15 toilet paper rolls, they're going to get 26 because they want to celebrate. And I don't mean to sound stupid, but this is exactly what it means. The discretionary sector in the U.S., one of the 11, and the staple sector are two important benchmarks that I use. And this is the ratio of XLYs, the consumer discretionary, versus XLP, consumer staples. Folks, this is going up. If it's going up, that means that discretionary stocks are outperforming staple stocks. That means that Tesla's outperforming Procter & Gamble. Now, obviously, on any given day, this isn't true. But in general, a basket of discretionary items, houses, restaurants, cars, are outperforming P&G, Kroger, other staple stocks. All right, that's a barometer for me to know that we are continuing in this bull market. Here's another one, the transportation index. Why is this important? Because if things are moving somebody's going to buy them. All right. Trucks don't just carry items from place to place and they sit there. They carry them. They get distributed on last mile carriers like Amazon, and people consume them. This is a positive. We're at lifetime highs, at least since 2006. I don't believe it's been any higher than that. Okay, so because transportation is so important, I actually want to spend some time now. Our stock of the week, that's the second of our segments here, subsegments. And this is another ETF. All right, this isn't an individual stock. And I talked about ETFs last week. For those of you that are clients that are in the DG or Diversified Growth Program, I'm one of them, of course, because I trade all of our programs and you're in this program. I don't want you to feel left out when I'm featuring CG and SG or Capital Growth and Strategic Growth stocks, okay? So IYT is the transportation ETF. The reason we invest in ETFs is because we can get a basket of stocks that are in the transportation sector. And why am I doing that? Well, really, all you have to do is look at the previous chart. Okay, so if I don't want to try to pick the exact winners, and DG does that, for SG and CG, I do try to pick the actual winners. Did pretty well with that last year. Okay, you go back 3 episodes and you'll see our 1 year, 3 year, and 5 year performance, those of you that are new to the program. But the reason I like this is because I get FedEx, I get Norfolk Southern, that's a railroad, Kansas City Southern, another railroad, Union Pacific, UPS. You can look at the various weightings. So basically, you could think of this as a mutual fund. Technically, it's called an exchange-traded fund. But this allows me to play a space of the U.S. economy, in this case, transportation, without having to pick a specific stock. Again, for capital growth and strategic growth, I do that. But there's more risk inherent with those programs than diversified growth. So that is IYT, and that's the featured stock of the week. Economic indicators, guys, there's just, I said up front when I showed you the thumbnail, earnings just off the wall. Just off the wall in a great way. So sorry I keep repeating your name, Larry and Connie, but it's just off the wall in a positive way. Look at the S&P 500. Now only 10% have reported, but 85% are beating their expectations, including 94% in the financial sector, 100% in the materials sector, 100% in the technology sector. That means no stock in those sectors has disappointed or even just matched their expectations of what they were publishing weeks ago before the actual data came out. They're all beating it, at least the ones highlighted in green. That's a positive economic indicator. Let's look at more. You guys see these from time to time. I like this one, getting $50. Oh gosh. Can you imagine having to pay somebody to come in and work at a McDonald's? So this is actually happening in Florida. I verified this with a news source. This is from, I think it's the Orlando Sentinel. And we had someone call to verify, yeah, this is really true. Paying $50 for an interview, and they might not even take the job. They might walk in and say, well, I just got $100 to go interview at Wendy's, and they're paying another $2, $3 an hour. If you remember, I traveled to Billings, Montana. Actually, I traveled to North Dakota and a small town in Montana. But the real crux of the whole oil industry was in Williston, North Dakota. And they actually shut down a McDonald's because they couldn't find workers because Walmart stole them all with $25 an hour wages. So when you see this kind of thing happen, it's really not that unusual. It's really not, especially when you have an environment like this. Now, what's the takeaway? I'll get to that in a second. Where are the job openings? Wind turbine technicians. So for those of you that are saying, or those people that are telling you, fossil fuels ruling everything, there are no more jobs in wind because the government isn't subsidizing and it's just a tragedy. No, that's not true. This is from the Bureau of Labor Statistics. Wind turbine technician, nurse practitioners, of course, the medical field, solar, photovoltaic installers. I really should have learned how to pronounce that before I talked to you guys. But the reality is there are all kinds of jobs available that are going unfilled. You cannot have a recession wherein there is this much demand for jobs. And you can say, well, I know plenty of people that are out of work. Folks, I've been saying this for a half a year now. There's going to be a massive retraining necessary to get this economy back to full employment. It's just simply going to be necessary. And those that are out of work are going to have to be active and pursue that. The government is not going to come in and help you with that. It's just not going to happen. GDP with American Jobs Plan and without. It's important that you look at this graph, so I just want to mention this. Do we really need this massive stimulus plan? I've already said that this $3.2 trillion Biden administration infrastructure plan really is metastasizing into a jobs plan. Well, I think the U.S. economy is doing pretty well on its own, which is why the Republicans are saying, look, let's just spend $800 billion on infrastructure and not bring in all these other areas, okay? You can see that with the American Jobs Plan, which is, this Biden administration plan, is really not that much of a difference, and it's adding on billions of dollars of debt that we don't have. I can't emphasize enough that debt is not something this country can absorb, and it's not something that helps us as investors, and that is the purpose of this program. Back to the reader who said, why do I keep doing these programs? Because I want you to understand the basics of what we need to effectively run this country. And if it bothers you the way the policies are being created at the federal and state level, you need to do something about it, and that's handled at the ballot box. All right. U.S. housing market. Oh, gosh. I don't even know where to go with this. I'm showing you a new chart tonight. This is lumber. Okay, these are lumber futures. I think we've got some traders online tonight, and if you go back 5 to 10 years, lumber's never been higher. Why are lumber futures higher? Because builders can't get enough of it. One of our viewers lives in Montana, and he'll order a batch of lumber for a big project, and they wait weeks because they can't cut the trees down fast enough because there's so much demand. That's why the housing numbers are what I've shown you. Okay? So this is lumber. Folks, you're not going to have a recession when lumber is at lifetime highs or certainly at 10-year highs. Housing starts rise to 15-year highs. The blue line, I know there's a lot of data here, but just focus in on the total housing starts at the right side of the graph. Okay, the green shows you what's single family and the light blue shows what's multifamily. But the bottom line here is that total housing starts are just way strong. Are they as strong as they were in 2006? No, but we know about the crash that happened then. And this is coming out of a pandemic. We're coming out of a pandemic, coming out of a very short-term recession that we had last year and still putting in these kinds of numbers. This is the resilience of the U.S. economy because we are a strong capitalist nation, and it is also the strength of a secular bull market playing out all across various sectors and permeating all parts of the U.S. economy. We don't want to mess this up, folks. We just don't. Okay? All right. I'm seeing some questions, so I want to address those. I like this comment. If you're waiting for Zillow to tell you when the real estate market has peaked, you might be waiting for a while. You also might miss the optimal time to sell your home. So some of you, and let me just take a second here and answer some questions. Okay, so I'm going to come back on camera and see what we got here in the chat. All right, already answered K. Lumber, yes, we want to rebuild our deck, and lumber's an issue. And that's absolutely true. That's in Ohio, Dr. J in Ohio, in Montana, in Florida. It's all over the country. I bet we've probably got 8 to 10 states represented on this call tonight. If you're having a lumber shortage and you know about it, type it in the chat so everybody can see it. I wish I could say that it's a good thing. It's not, because it means it's slowing the demand. I mean, at some point when demand is not able to be met, it can ebb away. You want to have enough inventory, just-in-time inventory, to be able to produce for demand, okay? So from Tom here in Lake Geneva, no workers in the mills either, making more money staying home. That's a different problem, but it's absolutely an issue. And that's, of course, because the government, in my opinion, wants to placate workers so that they don't have a motivation to come back to the workplace. That is a huge deterrent for the free capitalist society, which again makes for a stronger investing environment. I want to relay this story to you. Those of you that watched, I think it's 5 or 6 weeks ago now, Susan Thetford was a guest on my program. She's one of the rock star realtors here in Nashville. She told me a story. She said, I've told you a bunch of stories and I told them to you that night. Go back and watch your episode if you haven't seen it. But here's a brand new one. There was a house for sale in Brentwood for $799. We're going to call it $800. Okay, her clients from California bid $870 cash. $870 cash, that's $70,000 over. Feeling like, we're probably going to get this. I'm reading this from the screen now because I have to make sure this is correct. When they were informed the situation with the house, They were told that there were 37 bidders. Okay, you guys might call them offers, but sellers offer, buyers bid. Okay, there were 37 bids, and they weren't even in the top 5. Ultimately, the person who got the house bid more than $100,000 over the list price. That's what we're seeing in America right now. And it's not just limited to Tennessee and other red states. It's all over the country. Is this good and healthy? Well, it says to me, people have money to spend. If they have money to spend, we're not going into a recession. If we're not going into a recession, then the secular bull market continues. If the secular bull market continues and the politicians don't mess it up, we've got a pretty great future ahead of us. So that's the reason to this viewer who asked me why I do this program. It's a great time. What's the PI, the portfolio impact for real estate? The portfolio impact is when there's this strength in the discretionary sector in America, which housing is the biggest component, it's very good for America. It's very good for America and very, very dependable for generating increased wealth here. And that's what we want to see. All right, the last segment here for the night, Crypto Corner. There's been a lot of you having a ton of interest in crypto. Pretty short tonight. And that's why I want to talk about dominance. So you'll see BTC dominance. What does that mean? So
today's political.
Here we go. Some of you are aware that there are multiple coins, okay? And there are many more coins than Bitcoin or Ethereum or Doge. You may have heard of Doge, okay? And Bitcoin Cash. But always until, as long as I've been doing this, which isn't that long, since September, Bitcoin has always been more than 50% of the market. In other words, if it's a $2 trillion market, Bitcoin's been over 50%. Well, for the first time, if you look on the chart here, you'll see that the Bitcoin dominance is 49.7, Ether is 14.6. Why is this important? Because for you as an investor, realize there are other coins out there and they're catching up to Bitcoin. In fact, if you look, the number of cryptocurrencies as of yesterday was 9,433 on 369 exchanges. Now, if you want to trade stocks, you go to the New York Stock Exchange, the NASDAQ, the American Stock Exchange, the ICE, a lot of over-the-counters, BATS, okay? But let's just round it up and say there's 50. Okay, there are 369 crypto exchanges around the world with a market cap of less than 2 trillion. You see the 19 on the screen there? This is an asset class in its infancy and has nothing but upside, and that's why we're tracking it, okay? I think it's a very, very important asset class, and that's why we track it. So that's what we covered tonight, guys. I'd like you to type your questions in the chat, anything you want to ask me. I'm just going to review. We talked about COVID, vaccines, way more vaccine availability in America than overseas, in U.S. policy. I'm hammering the Biden administration. I did so with Trump administration when they did things that I didn't think was in our best interest, but we've got some very serious concerns with where this administration is going, in that they are not doing anything, in my estimation, that's helping investors, with the exception of just 1/3 of the infrastructure package. The world economy, we looked at the weekly review, and I commented on the second the second author's email, why is my portfolio underperforming? And I showed that in detail as I did earlier. Featured stock was actually an ETF. Those of you want to understand more about ETFs versus stocks, I'm happy to help you. In economic indicators, they continue to look great. We skipped the Fed tonight. We looked at the housing market. I told you this incredible story of just so many bidders and not enough sellers, okay? Crypto Corner, interesting now that Bitcoin is not the only game in town, for sure. In fact, it's less than 50% of the market. We skipped American energy and investing in post-COVID because we had such long material in these other places. So just reminding you again while I'm checking the chat, if you're new to the program and you know somebody that could benefit from what we're calling rarity in clarity, I'd ask that you subscribe to us, that you click the button, the little apple, or the little bell, I guess I should say, that lets you know when we're going to release a program, either live or pre-recorded. And then, subscribe to us on Twitter so you can follow us, see our tweets every day, and tell your friends we're on Facebook, CB3 Live. It's on Twitter, of course, and then LinkedIn. So let me look in the chat over here before I go forward with a final piece here. Is there anything over here? So everywhere, Florida and Maine that we know of. Okay, yep, got it. Deb, thanks for submitting that. Yep. You're agreeing with me, Tom Zinniger. I appreciate that. Low interest rate allows us to buy a more expensive home. We took advantage of that, and I know there are many other Americans that are doing that as well. And I think people are taking advantage. So I want to finish now with something that this is going to be a little different. But you guys are used to me closing the program with that quote from 2 Timothy. And I'm just going to reiterate again why we're doing this program. It's investing clarity that we're bringing to you. So stay with me, guys. Don't hang up yet, because we've got a really important point here. Okay, I'm investing in you with what I'm saying on these programs. Okay, I think it's rare to have this kind of clarity. I wish it weren't rare. I really do wish it weren't rare, but I think so many other media outlets have an agenda. And I want to share now this closing statement. Okay, this is something, again, every single episode I have actually read from 2 Timothy. But now I'm actually going to read something that looks like it's an obituary, and it's pretty unusual for the show, but just hang with me. It has a reason, okay? April 19th, that's a typo, 1933. I commit my soul into the hands of my Savior in full confidence. Now, this is a personal obit, right? That he, having redeemed it, will present it faultless before the throne of my heavenly Father. I entreat my children to maintain and defend at any cost of personal sacrifice the blessed doctrine of the complete atonement for the sin through Jesus Christ and through that alone. Now, you might be thinking, why would I have this on a financial program? Well, the truth is, you're probably thinking this is Billy Graham or some famous theologian that passed away. That's actually not true. I was made aware of this by listening to a program by Dr. Erwin Lutzer, who I mentioned earlier in the program. This is actually the words that begin the last will and testament of John Pierpont Morgan. Now, you may not recognize the name John Pierpont Morgan, but I'm guessing you will if I call him by his initials, J.P. Morgan. He lived from 1837 to 1913. He was the 24th wealthiest person in history. Why is that salient, and why am I mentioning that tonight? And here's why. Because a reader asked me, why are you continuing to do these programs? If COVID's winding up, why are you continuing to do these? I wanted to show you another American who made a substantive difference. It seems to me that so many in this country are saying, ask not what I can do for my country, tell me what my country can do for me. Well, that's not what John Kennedy said in 1963. He said, ask not what your country can do for you. Ask what you can do for your country. Well, I'm going to read here that in 1893, J.P. Morgan arranged to sell a portion of his company's own gold reserves to the government in exchange for a massive 30-year bond. The U.S. government was actually indebted to J.P. Morgan. He helped also in 1907 prevent a massive financial panic by bailing out several New York banks. We need more Americans like this. You may not like him. You may think he's a robber baron. But here's what I do know. That without Americans standing up and saying, this country matters, we're going to lose what we have. And so this is my final and ultimate answer to this viewer of why I keep doing this. I keep doing these programs because I want to empower you, my clients, and my people who want to get financially educated on what you need to do to contribute to building your own personal wealth so that you can give back. So that you're not asking what this country can do for you. You're looking for ways that you can help this country. And if we all do that, it's just going to be a better place. It's going to be a better and stronger U.S. government and America, the place where we all live. It's that important to me, folks. So if I can give you investing clarity, then that's what I want to do. And I hope it benefits you. And that's our show. This is Thursday, April 22nd. I'm Charles Brown, Portfolio Manager with CB3 Financial, where we don't just manage your assets, we become one of them. From COVID to U.S. politics to the world economy to clarity. This is CB3 Live, and I'll see you next week.